Welcome all traders across the globe at every level, and welcome to our presentation this morning on putting a stamp on the current state of the U.S. marketplace. Whether you're trading end of day, um, cyclical rotation, individual stocks, index funds, futures, whatever instrument you're going to be trading on a daily basis, especially futures real time, we need to understand that the most important beginning aspect of trading is to put a numbered stamp, okay, an official category on, what is the current state of the US market? Are we net neutral? Are we long? Are we short? Where can we expect any real areas that are currently laid out in order to be penetrated to have serious considerations to trade short or long? So let's get right into the presentation here, and I want to talk about the most recent, most important happening that's taken place, and it is the volume that came in here on 5/23/2024. So here it is blown up. We haven't had any volume of that size since all the way back, which exceeded the 23rd on 4/19. Now this is very important because the only people who could possibly generate that kind of volume are the deepest pockets. We're talking about, again, as I always mention, the vanguards, the offshore, the biggest offshore, hedge funds, BlackRock, all these people who can and do move prices from one level to another. So there's your institutional buying or selling that's come in, and we believe at this time, based on what we're looking at, that that day was mostly selling that came in on 5/23. Again, a big down day here with an astronomical amount of volume behind it. So let's take a look under the pretense that the market may trade down. And the only way that would change is if this is a glorified shakeout to the downside, where they have taken all the stops out that are closely related to some of these recent market bottom areas here in order to prove the prices back up. We should be moving down based on what we're looking at right now. So looking at these levels here, let's get a few in near the most recent open or closing prices and see what those targets can be. Now, these are approximated levels, people, because we're under time constraint. The market will be open in about 35 minutes. So here at approximately 52.6825 on this bar's open, the next level to the downside would be approximately right here with these three opens at that point. Okay. And then again here, this bar is open right here. So we're drawing from 5.9, 5.14. And the most recent floor that I want to get through is 5.15 if the prices are going to trade down, again, accompanied with some institutional selling to the downside in order to make that something that we could be very interested in trading. And the next level down here would be right about at this point, drawn from the opening of 5.5. Now, for those traders who have a little more experience, and what I will get into shortly here, is the price action to the upside. The action is pretty good. They're all up closes. If this is in fact a sell to start to drive the market down after equities open today or early afternoon after Memorial Day holiday, then this is the floor level that I want to get through in order to be short level 6 for sure. If I get through here, 52.40.25 approximately, again, under increased volume, accompanied with that break of that floor, I'll be short level 7 here, possibly 8, or in before that, somewhere around the middle point of these two horizontal support lines drawn from these prices here, which would basically be right here. And that would be because of the distance between the upper area and the lower area. Obviously, this low has already penetrated that. The halfway point from here, this bar is open to the close. So enough about the price action for now. Let's take a look at the short-term money flow institutional tracker that we use here. Simple MFI calculation, 14-period look back. And there we have it. So your peak has been established here and traded down before the large bar down came into play. So there was your prefix to the down move on the MFI itself. Short-term money was already leaving the market before this big day down, and we are still down. So let's look at the relative comparison of this peak where the prices are located. And again, this peak here where the higher prices are located here. That is a very, very clear signal, a definitive difference between peaks and prices to show that the actual strength of the MFI short-term money is much lower at this point as compared to anything that's come through all the way back. Come on, to 12/27, 2023. That's a long time. And then again, these levels here down at this point as compared to these higher prices are also indicating that these prices again traded up on inflated highs, right? So that's a clear sign for a possible short market. Again, here looking at longer term money flow, checking money flow. We need the upsloping trend line break here to the downside, and then possibly this one here for the follow through on the short to the downside. But again, we're looking at a higher peak, a lower peak as compared to the price action that's associated with these points. So today I'm looking to see in real time if that break is going to be made, and that can help change my bias to get through short level 6, getting through this point if the prices trade down, as we mentioned earlier, on the volume chart as compared to the prices. And again, checking oscillator, 2 trend lines upsloping have already been penetrated. So we have an accumulation distribution computation that's pegged to the MACD indicator, which has already shown that this portion of the price action should already be moving down on today's open equity session as we move forward. And again, stochastics momentum index going in the correct order here. We're already crossing above to below in the overbought zone. So that's a good indication as well. Last but not least, MACD. This is the only indicator in our arsenal right here that does have a negative divergence as compared to the prices. So that's good. The peak has been established, as you can see here. We don't need to cross from above to below to consider going short on a real time or end of day basis. We just need an established peak, which has already happened, and some down movement, okay, right here at that point. So, in conclusion, keeping it short and clean. Getting back to the volume chart with the prices up top. People pay attention quickly and sharply. If you're going to trade today, the first thing that's going to have to happen is you're going to have to get through this bar's down close right here. The low is already there. Again, that's coming in from 523. If that happens, you have a free and clear move from here all the way down to here. Check the point spread. Get your calculator. What's 5268.25 minus 5285.25? That's a lot of points in real time. That's a nice entry point for an end of day short. Looking for the follow through. And again, the next level to the downside to get through to continue short would be 52 again, right there, 5268.25. Then you have a free and clear from here to here. We'd also want to tighten that up. And we'd be approximately right there, the half mark between this open and this close. So we have 1, 2, 3 different downside price profit targets, PPT number 1, 2, and 3, that could all happen within a few days of trading action this week. We got the rest of the week to make this happen. It could. And if it does, that's exactly where and when you want to be in and where you want to be out on a rally if you're trading in real time, or consider the possibility of hanging on to your trades, your end of day trades, looking for 3, 5, 7, 9 days. 3s will always be the most accurate and profitable, and you move on from there. A lot of information in a short period of time, but it's good because we have the ability to be able to make this happen for the traders who haven't, unfortunately, yet been able to come across the right information, especially the first time. For more information on how we can best help you to become a professional, you can log on to our website. All the information is there. This is Jeff Kilian again for the VTC. Thank you for being with us, and we'll pick it up on the next presentation. Be careful out there.